And welcome. This is Mary Ellen McGonagle with your weekly MEM Edge show for Friday, October 8th. And this, of course, is the show where we bring you where the action is in the broader markets, and the bumpiness is continuing. Lots that we're going to be covering here today. Let's just take a quick look at our agenda. As usual, taking a look at the current markets. Where do we stand? What we can look forward to potentially. Also, hot spots, gainers, and what you can expect from them. As many of you may know, there are two areas of the market that have been on fire, and we will review that. Also, we're going to take a look at turnaround stocks in a tough market. The markets were generally the NASDAQ flat, but the S&P up. But there were some names that are beginning to emerge from downtrends. Definitely work taking a look at. From there, bright spots in a tough market. So overall, I would argue that the markets have been difficult, to say the least, but we are going to focus on those areas that are coming through, that are shining. There are sound reasons for that. It's going to be outside of those hotspot gainers. From here, let's take a look at some of the more impactful news that was released last week. We did see that debt limit. There was a short-term extension that was provided for that via the Senate. So it will take this debt limit issue into next week, but certainly it was enough to stabilize the markets as it related to that debt limit issue. Also, we did see Treasury yields reaching a multi-month high. We're going to talk about that because of just how impactful those higher interest rates are. Also, did see oil prices hit a 7-year high, and lots of reasons behind that as well. And that, of course, is one of those hot pocket areas, as are financials due to the yield issues. And we did see non-farm payrolls come in. They came in today quite a bit less than anticipated. Markets were looking for about 500,000, and the number was closer to 200,000. There is going to be impact there, and it's going to be primarily wage growth issues that will in turn, unfortunately, do not do inflation very well. We will see an inflationary impact from that wage growth possibility. Also, we did see the unemployment rate did drop for the most recent month. Next week, consumer and producer price index, that's going to be all about inflation. You'll want to keep an eye on that. Retail sales and consumer sentiment will be released next week, and both of those have tended to be rather impactful. So let's from here take a look at the broader markets. From here, we're going to take a look at the daily S&P 500 index, and this has certainly been more than just the nominal pullbacks that we have experienced so far this year. It has been lengthier in its declining phase, and also we did see the S&P 500 break below this blue 100-day simple moving average, which was one of those key initial areas of support. I'm pointing this out because this was the 8th pullback of the year, and these other shorter-lived pullbacks, recovery was much swifter. So what we are seeing now is a secondary recovery attempt, and the longer this declining period, the longer your recovery period out of that. So we are still waiting for that S&P 500 to get back up above this red 50-day simple moving average. We do have positive stochastics down here. This is a faster moving momentum indicator. However, your RSI is drifting below that net neutral, so it is in negative standing. So not very constructive, certainly with the S&P 500. From here, we do want to, of course, drill down. Let's take a look at what's happening behind this to, again, seek the current strength. That's what certainly my work is all about. I want to uncover where that outperformance is so that I and my MEM Edge subscribers can participate in that strength. So I've gone ahead and put in each of these 11 sectors I am going to go ahead and add the RSI, that relative strength indicator, and then sort it in descending order. And let's take a look. This is an area I unfortunately was not able to do a show last week, but the prior week I was all about energy and financial stocks. Again, subscribers of my report will be all over this as well. And we can see that energy stocks are breaking out of a multi-month base, and it's doing so on very high volume, confirmed uptrend, and lots of underlying stocks. Now, there are winners that are going up higher than the others, and that's certainly what it's all about as far as getting in front of. As we drill down, we will review that and get into some of those names. Financials were up certainly better than the market, quite a bit, 3 times better than the S&P 500, and we can see this is another area that we are getting a nice, this is more of a 6-week base breakout. Outside momentum indicators are quite constructive. Bank stocks did do well this week, but there's another area emerging in financials, and that is insurance stocks. I think we will have time to get to a couple of those names. And so let's go ahead and move forward, because we want to, in addition to being well aware of where that strength is, participating in that, it's equally important to know where that general weakness, make sure that you're not, at the very least, heavily weighted. So this is healthcare, and we can see healthcare stocks had a tremendous run. We had a number of stocks that we picked up back here in April and then again in May. And as they began to deteriorate, we did remove them from our list. A lot of the names that were being favored during this uptrend were higher growth medical products stocks. They are going to be impacted by inflation fears and others. So we can see that this deterioration in healthcare still remains very much in place. So from here, let's take a quick look at another highly impactful area of the markets, and healthcare is a heavyweight. I'm going to take us from here to the technology sector. Of course, a favorite area for me as far as fishing for outperformers, but not so much lately. This area has been hit. The NASDAQ looks very similar to this in the sense that it's fallen further than certainly the S&P 500. So we are seeing the technology sector. It did firm up a bit mid-week this week. It is still in the throes of attempting to reverse this downtrend. Let's go ahead back historically, take a look at this April into May period, because you want to be aware of those characteristics. And in fact, this February into March, there actually was a correction. So some of the characteristics you are going to want to be on the lookout for to indicate, we'll use this area because the uptrend out of here was rather lengthy. So your first area, of course, is you will want to look for stabilization of the price. So we did get this higher low that occurred in late May, and then from there an advance above these moving averages. In essence, you're ultimately on the prowl for upticks that help move these shorter term moving averages, this 10-day into an uptrend. You can see we're not really anywhere close to that at this juncture. And then you want to marry that with your outside momentum indicators turning positive. So we do have more work to do with tech. Those that are subscribers, I've already shared my watch list, and I'm going to keep you apprised because there are a number of high growth areas in there that may or may not continue to be impacted by inflation. So that's it for those subgroupings. From here, I'm going to take a minute and go ahead and look at some of the more active ETFs in the broader markets. And I'm talking about software, biotechs, semiconductors, and so forth. I've gone ahead and populated that. RSI again, let's go ahead and update that. And again, we want to see where that strength is, also where the weakness. So first up, we can see crude oil prices, and they've actually this week popped up above that 80, closing the week at 82.5. And that is a 7-year high for crude oil pricing, and that's very, very impactful, certainly for a number of oil-related stocks. In fact, two major Wall Street firms are calling for a potential $100 per barrel pricing into next year. Now, that, from a lot of experts' points of view, would not be so good because the impact as it relates to various industries at that $100 level would be a bit negative, if you will. But for now, this per barrel pricing is in a confirmed uptrend. OPEC agreed to stay with those lower production levels. We do have an oil or energy crisis taking place overseas. So lots of dynamics that are pushing this higher. From here, taking a look here at the 10-year yield on the Treasury. I did, let's see if I can pull up my other chart here, and it's not a whole lot different. It's just quite simply pointing out to you the uptrend in this yield on the 10-year at 1.6. Analysts are calling for this 1.75 level to be very impactful. This is what occurred here back March into April. We did see yields get that high, and that in turn led to deterioration that we were discussing in the technology sector. So let's go ahead and move on from here and take a look at some of these other areas that are negatively impacted. And I think I may have confused myself here. So here we are with those ETFs. And I did want to point out to you, this is the regional banking ETF. We can see that over the last 2 days, it has broken out of a 5-month base. Very constructive looking, lots of nice base breakouts underlying within the banking industry as well. But as we kind of drill down a little bit here, two areas that I need to share with you, because they are areas that I had been very bullish upon prior to this break, certainly below this 50-day about a week and a half ago. So this is IGB, the tech software ETF, and we can see that I talked about it firming up midweek and looking rather constructive, poised to potentially turn, but we were denied at that 50-day. And you can see the RSI negative here, your in this case MACD negative territory, so still have work to do there. Let's go ahead and take a look at semiconductors. This is another fan favorite of mine for some time. Although the chart looks wobbly, there were select areas that were really in an uptrend and looking quite constructive until we did see this break. And for my work, again, readers of my report will know the heavy volume characteristics had us exiting most of our semi stocks as they broke down. So again, another area that definitely still has more work ahead before turning positive. And then on that healthcare front, this is the biotechnology ETF, IBB, this significant decline here. This is all about a risk-off sentiment. Let's go back to this prior period here when we did see an equally ominous, or actually negative, peak to trough break. And again, this is that interest rate rising fear, but more importantly, as it relates to biotechs, it's a risk-off environment. That's what's going to be your proxy for that. So we do have lots more. Let me just see if I can. Okay, we did take a look at Brent, so we're okay there. So I'm going to take a brief break. As mentioned, we have lots of other areas that we are going to be covering, so we'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. I am from here going to go ahead and share with you some industry groupings, sub-industry groupings that are somewhat bucking, and actually very much so bucking, the downtrend that we're seeing elsewhere, and it is for sound reason. First up, we are going to take a look at some of these staffing stocks. Now, there is a labor shortage, but there is also a number of organizations, corporations that are looking to hire individuals, and so it will be sometimes industry specific as it relates to that as well. So this is Cross Country Healthcare. CCRN is the ticker symbol. They do provide nurses and doctors on a temporary basis, and they travel oftentimes throughout the US. We can see the stock. It's not a particularly large company, but it is breaking out of this nice base. You have an RSI trending upward, and we can see that your MACD had that nice positive crossover. You like to see high volume characteristics on the breakout. Just a couple of other names that we can take a quick look at. This is also an employment firm, and it deals with light industrial industries, and we can see another base breakout, pretty good volume. Your momentum indicators trading upward from a relatively low area. One last name is in the senior executive space as far as employment providers or agencies. And we can see another base breakout. This stock broke out yesterday, nice volume, a little extended here, no doubt, but certainly worthy of knowing where there are bright spots, so to speak. Another area that fared well and has been doing well are some of these lodging stocks, but it is very selective. I'm going to share with you within the consumer discretionary space. We didn't really talk much about it, but this is one, the leisure lodging, certainly subsequent to Merck's announcement of a potential COVID pill, really gave this group a boost, which has continued. It's held in well. This is Hilton Worldwide. HLT is the ticker symbol. 89% growth going into next year. Stock is in an uptrend. And then what I found in drilling down into this industry groups, this is Wyndham Hotels, also in a nice uptrend, certainly a bit extended. Choice Hotels. So what you may have noticed is it's more the middle market within these hotels that are doing well. The larger executive, those hotels that cater to conferences, are not doing as well. Here's Hyatt, ticker symbol H, a little bit earlier in its advance, and we can see that it is poised to break out. We're just a hair away from a nice base breakout here. This particular company is a little more mixed as it relates to conferences as well as that middle market area. So another area that we can take a look at, many of you may have been hearing about the continued increase in commodity prices. There's been a real shortage. So there are particular, let's take a quick look because I failed to spend a minute on the industrial sector. Now, we're not quite there yet, but the sector did find support at this 200-day moving average. It had a 1.8% rally this week. That's relative to a 0.8 on the S&P. RSI just turning positive. We want to see a broadening out of the markets, so we can see industrials are beginning to wake up. There's actually two areas in here that I'm going to point you toward. First up is specialty chemical stocks, and they are again going to have everything to do with that commodity shortage. Now, I'm not early in sharing this with you. This is Methanex, MEOH, but it is in a confirmed uptrend nice high volume. Perhaps we can use it as an educational chart because keying in on this downtrend reversal as the stock breaks back above this blue 200-day simple moving average, you start to see the volume pick up. That's quite constructive. And then using that 10-day as a pullback. So let's move on, take a look at a stock in the chemical and commodity space that is breaking out. Actually, it did break out this week out of a 4-month base. This is Mosaic, and the company's on track for 469% earnings growth. And when we can see this nice space breakout, nice volume characteristics, one other name that was up actually more last week, but it also held in. This is CF Industries, ticker symbol CF, a little extended here. The overbought position above this 70 does is reminiscent of prior periods, so we may get a pullback, but more of a pointing out to you that we are seeing movement in some industrial areas. One other area of industrials that are doing really quite well, and it's all about what is being termed the space wars. What is happening currently is the Space Development Agency is currently, actually today, I'm going to share with you 3 of 5 companies that bid for contracts with this agency to provide these wide field of view satellites. This is the new defense that's taking place. It allows these wide views to be able to intercept potential missiles. So RTX, Raytheon, is one of those companies. And take a look, breaking out of this nice space here, and we have nice dynamics on the momentum. Now, those that are awarded a contract, they will not receive news until the end of January, but these stocks are rallying on the potential. And here we are with L3Harris Technologies, LHX, a nice downtrend reversal here, pretty good volume. We have an RSI that's positive. I'd like to see that MACD get up here above that net neutral zero, but it certainly appears to be heading that way. Another name that we can take a look at that is also in the running for this big contract, and it certainly has been running. This is Northrop Grumman, and we can see the stock really has been in a go nowhere environment for many months. This week's price action did push the stock out to a new high, big volume, and nice momentum outside indicators as well. So that's a nice look at some of that. Some of those names in industrials. One other area that I would be remiss in not mentioning, hopefully I pick a good stock, but rail stocks are on the move. So let's see if I can, not the best of names, but you can drill down. It's not an area that I'm currently interested in, but there is an uptick in those areas as it relates to rail stocks in particular. So from here, I did mention to you that we are seeing a nice movement into financial stocks, this nice saucer type base formation breakout, and it is broadening out beyond those banks. So let's take a look. I'm going to share with you some specialty retail. I did see a theme there that kind of captured my attention, and that is these subprime and other unusual lenders. So first up, we're looking at EZPW, and this is a pawn shop. You can see that it is rather wobbly. It is a thinner stock, but certainly breaking out of this nice 3-week base here, big volume. Another name that we can look at that is certainly newer to this alternative financial space, and that is Upstart Holdings. The company's on track for 893% year-over-year earnings growth, and they do focus on subprime lending and in particular auto loans. So we can see it was due a pullback, certainly a big year-to-date winner. It was overbought, the RSI above 70, your MACD just ran out of upside room. So we are experiencing, and rather than pulling back significantly, similar to prior periods. The stock's trading really quite tightly, and I would call it just a very modest pullback, finding support at this 21. So this is a stock that I would put on your radar screen so that when that pullback dynamic, if you can potentially be turning from that lower level, that would be quite constructive. And then one last subprime, subprime lender that we can take a quick look at here is Atlanticus. ATLC. We can see it hit a new high here in September. Very similar dynamics to Upstart, where you were overbought. But I wanted to share this with you as far as what to be on the lookout for when stocks pull back, because what we're seeing now are many stocks doing more than pulling back. They're breaking key support, but those names that pull back find support at their 50-day, and it allows a reset button, if you will, with this MACD and now crossing upward from a lower area. This wouldn't be my top pick. It's more an educational purposes to share this with you. I do want to take a quick look here at some of those turnarounds that I mentioned, and a couple of them were in, actually 3 were in the auto industry. Take a look. This is General Motors. Their CEO came out last week, very ambitious growth plans. The street liked what they heard. We did see this price break back above the 200-day, your outside momentum indicator, certainly your MACD, now in positive territory. And this is what I was mentioning as far as the advance, then turning these shorter term moving averages up. So you can see the green line up through the red. Your shorter moving averages are trending upward so that now they can act as support as opposed to acting as resistance while they're trending lower. Another big auto name here, Ford. They did have a record new high in electric vehicle sales. Also, they announced the construction. They have a new $11 billion facility just for electric vehicles. Again, street like this, we can see it broke out of this nice base. I would argue a cup with handle base breakout on Ford. And then last up, we can take a look at Tata Motors, TTM. This is out of India. We can see it had a nice base breakout, big volume on that move. Another name on the turnaround side, but it's not autos. This is Upwork. The company does provide temporary employment, so it ties back in with our earlier look at some of those employment agencies. And we can see it had this nice uptrending period here this week. Something perhaps might be of interest. IBKR is a broker, interactive broker, and we can see a very lengthy declining period, and finding down upside resistance eventually breaks back above that. So it's now above that 200-day. So looking really quite constructive. For those of you that have not taken a look at my MEM Edge report, I urge you to do so. Of the top 20 stocks in mid-cap as well as the S&P 500, there were 4 names that were up the most today. Those 4 stocks are 4 of 8 stocks that are on my buy list. So I want you to get in front of those names, really experience that, and also stay tuned to any further rotation as well as strength in the broader markets. Everyone have a great weekend. I look forward to seeing you next Friday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.